Alright, for this video I want to go over a sample form 8582 for passive activity loss limits. And in this scenario we're going to look at a taxpayer that disposes of a passive activity during the year, and so they are freeing up those prior year unallowed passive losses. So we've got the 8582 here, which is 2 pages. We've also got the Taxpayers Schedule E Part 2, where we'll show how we record that entire disposition. And it is part of the full 1040, so we'll cover all the schedules and forms within his 1040 that you might need to complete. Now, for reference, we've also got the prior year 8582, so his 2022 passive activity loss limit form, and so we'll have a look at this to see how those losses were first carried over to 2023 and then they were released. And then we've also got some K1s for the taxpayer. So he's got 3 partnership investments, one of which is an active business that he materially participates in. And then the other 2 are active businesses, but he does not materially participate. So they are passive activities to the taxpayer. So we'll cover those as well. And then lastly, we've got just one slide here covering some background on this 8582, and then some more details on the fact pattern itself. So the general rule when we talk about passive activity losses is that you cannot use them to offset income from non-passive activities. Now there's a handful of exceptions, and then one of these big exceptions, which we're addressing in this video, is when you dispose of the entire interest in that passive activity. So by disposing of an interest in the passive activity, what it really accomplishes is it shifts those losses from passive to a non-passive bucket. And so if you have prior year unallowed passive losses, and if you have current year passive losses in this activity, they now get reallocated to that non-passive basket, and so they can be used to offset your non-passive income. Now, really important here to remember that it has to be a sale of basically the entire activity, right? So a disposition of less than substantially all will not trigger the allowance of prior year losses. So if you're just selling a little bit here and there, it's not going to be enough to recharacterize it. You're still going to have a carry forward of those losses. Now, also important to remember that disposing of that partnership interest, so whether it's a sale, exchange, or a redemption, you also likely have some reporting on other forms as well. So 8949, the 4797. In this video, we're just going to look at the 8582 and then how Schedule E Part 2 is impacted. So if we look at our fact pattern here, we have John. He's a managing member of Active Business LLC and materially participates. And so for that reason, this entity, this partnership, it is non-passive to him. So this is a non-passive activity. Now, John is also an investor in 2 passive activities, which both have prior year unallowed losses. John was redeemed out of his investment in Partnership Fund 2 LLC, and he received a Schedule K1 that's marked final and has a capital account balance of 0. And so now John has to update his 8582 Schedule E in order to report these activities and then claim those losses. So this is a summary of the activity that we see on the K1. So we can see his active business LLC on the bottom there, non-passive. He had $32,000 of line 1 income, and then no prior year losses or cumulative losses, right? So $32,000 in income is going to get reported on his Schedule E. For partnerships 1 and 2, both passive activities, both of them had prior year losses that were unallowed. So if we have a quick look at the prior year 8582, I'll show you what I mean here. So for the 2022 return, if we scroll down to Part 8 where we have the allowed losses for the year, we can see we have Partnership 1, Partnership 2. The total losses are $12,000 and $6,200 for these 2. And the amount that was allowed in 2022 is 0. And so the unallowed loss that's being carried forward to next year is $12,000 and then $6,200 for Partnership Fund 2. So that's our prior year losses unallowed going into 2023. Now in the current year, these both had losses again. So Partnership Fund 1 lost $3,000, line 1 ordinary loss, and partnership fund 2 lost $950. So the cumulative amount of losses from both of these, $15,000 and then $7,150. Now what you see here is the allowed loss for partnership 1 is going to be 0 because we still hold on to partnership fund 1, so we're not able to free those up. But partnership fund 2, where he was redeemed out, we can now characterize these losses as non-passive, and so we're going to be allowed to take them. All right, so if we look at the K1 for that partnership, so this is the partnership fund 2 K1. We can see it is marked final because he's no longer a partner, and we can see the allocation of line 1 losses there, a little bit of interest income, and then we can see that in the partner capital account rec, he was redeemed out, and so he's no longer an investor. All right, so now if we have a look at the 8582 in the Schedule E, what we're going to show is that, okay, we've got the active business income reported. We're going to have a final disposition of the Partnership Fund 2, and then the Partnership Fund 1 still remains a passive activity with losses that have to be carried forward. So if we start with Schedule E, so Schedule E Part 2, where we report those income and losses from partnerships, we can see down here on line D, so row D, active business LLC, partnership entity. Row D, we have the $32,000 characterized as non-passive income. So that's pretty straightforward, right? Now, Partnership Fund 2 is the entity that we disposed of. So how do we report this for the current year? Well, row B, we have Partnership Fund 2 LLC, and we've recorded the amount of non-passive a loss. That's the $950 in the current year. Notice it's in the non-passive income section. It's not in the passive income or loss section, and that's because it's an entire disposition, so it's been recharacterized as non-passive loss allowed. Now, the first row reports the activity from just the current period, and then we mark it EDPA, meaning entire disposition of a passive activity. Then directly below that line item, we have another row for PYA, so prior year allowed, right? So prior year's unallowed losses are now allowed. And then we mark on row C the amount of losses from those prior periods that are now being freed up and characterized as non-passive. So we have $950 from the current year being allowed, $6,200 of prior year unallowed that is now being characterized as non-passive. So the full $7,150, as we can see summarized in our table here, although it's passive activity loss because we had a disposition, $7,150 is now being allowed, and that is offsetting our non-passive income from that active business. So the net amount of income that's ultimately flowing up to Schedule 1 now is $24,850, and that's because we sold that investment. Now, for the fund that remains, Partnership Fund 1, we can see here that this Partnership Fund 1, row A, is still falling within the passive income or loss section. So let's have a look at the 8582 here. So when we do the 8582, we start with not Part 1, but you start on page 2 with Part 5. Right, so it asks us, so at the very top here, right, it says caution, you need to complete parts 4 and 5 before going to part 1. So part 4 is used for real estate activities. All other passive activities work with part 5. So in part 5 here, we have Partnership Fund 1 LLC. We have the current year loss of $3,000 per that K1, and the prior year loss unallowed being carried forward is the $12,000. So notice we don't list Partnership Fund 2 here, and that's because although it was a prior year unallowed loss carried forward, it's no longer reported on the 8582 because we've freed up the losses. They're no longer being tracked on this schedule. So we have the $3,000 of loss for the current period. So if we look here, there's the $3,000 loss from this fund for 2023, and then the $12,000 unallowed prior year loss is what we see down here in Part 8, right? So $12,000 unallowed loss from 2022, $12,000 is being carried forward to 2023. So we've got current year loss, prior year unallowed, overall gain or loss of $15,000. And then the same song and dance applies here, right? We have no other passive activity income to offset. This is not a disposition. So of our $15,000 loss, the amount of unallowed remains at 15 and the amount of allowed remains at 0. All right, so once all of those sections are completed, we can go back up to the 8582 here in part 1. So 2A, we have no net income. 2B, activities with a net loss for the current period. There's that $3,000. And then the prior year unallowed being carried forward is the $12,000 from the same investment. So we've got the $15,000 loss here. Total losses allowed in part 3 for the current year from passive activities are going to be 0. So the only losses that have been allowed are those prior year loss carry forwards and the current year stuff from Partnership Fund to LLC. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next one. Thank you.